The S&P just punched through 7,700 for the first time since it was setting records last week. And it did it on a day Home Depot beat, reaffirmed, popped 2% before the bell, and then closed, basically unchanged. Good morning, it's Wednesday, August 19th. I'm Nick Vertucci with Ashley Reyes and Marcus Brooks. Grab your coffee. We've got a 2-day pullback that just broke a level, a Home Depot print that looked like a win until the close, Target and Lowe's before the open, and the Fed minutes at 2. That's the whole week sitting on one afternoon.
Morning! And can I just say, I love a Wednesday that actually has a job.
You say that every time the calendar's loaded?
Because it's true every time.
Scoreboard first because we promised you this one. Monday's Home Depot calls, graded against Tuesday's close. Ashley, you said if they repeated the large project pullback language, the stock sells off and drags the retail complex with it.
I remembered a sentence.
They did use the language. Smaller projects, big ticket work stalled on housing turnover. That's your setup. The stock did not sell off. It popped about 2% pre-market, and it closed down 0.12%. Lowe's, the name that was supposed to get dragged, finished up 1.6% on Home Depot's print.
So I got the adjectives and missed the tape.
You got the adjectives and missed the tape. That's a loss. 13-13, streak of -1. Back to even.
I'll take it. I was pricing the caution, not the beat, and the beat was real. I got that wrong.
Marcus, your side. Hold or raise the guide. Stock holds or stays green.
They reaffirmed the full year numbers. Stock closed flat. I'll take the hold.
That's a win. 14-11, 2-day streak. First time you've had daylight on Ashley all quarter.
Enjoy the sound of it. I don't expect it to last the week.
Neither do I.
Sarah's oil call from yesterday. Brent above 92 with volume, or back under 90, closed right in the hole, around 91. I'm not forcing a coin flip onto the board. It rides as a nothing.
Honest. Prefer that.
And your target calls from yesterday don't resolve until this morning's print, so those sit. Ashley needs comps under 1%. Marcus needs 1.3 or a guide raise. We'll do that tomorrow. On to the tape that actually happened.
Okay. Tuesday was not a vibe. It was a break. S&P closed 76.92, down 0.7. That's through the 7,700 we told people was the near-term floor. Nasdaq dropped 1.3% to 26,290, through the 26,400 to 26,500 shelf. Dow barely nicked, down 0.2, 53,343. VIX up to 1579.
So the Dow held, the S&P didn't, and Nasdaq got run over.
That's the session.
Ugly session. Yahoo Finance had Nvidia off more than 2%. The semiconductor ETF had its worst day since July, down more than 5. Micron and SanDisk both dropped more than 5 after leading Monday. And the neocloud names, CoreWeave off 11, Nebius off 8, TeraWolf off 12. That's not a rotation, that's duration getting marked.
I'd slow you down one notch. The street's close note had 299 S&P names in the green. Healthcare, staples, energy all finished up. 59% of U.S. issues declined, which is a down day, not a washout. This was a Nasdaq and chips problem sitting inside a market that was otherwise picking its spots.
See? That's where I disagree. 299 names. Green is a nice trivia fact. When the index that people actually own just lost the level it spent a week.
Defending, I know. And people own the other 299 names too. Those aren't trivia.
Give me the rates piece, because that's what actually did the damage.
10-year eased a little, closed around 470 after tagging 475 earlier. That's a 19-month high on the print, then a fade. 30-year held near a 19-year high. Yahoo had it at 529, down 2 basis points on the day. So the long end didn't blow up further. It just stayed expensive.
An expensive long end is exactly why CoreWeave and Nebius got hit. Those are businesses that borrow to build, then collect the rent later. When the 30-year is at a 19-year high, the rent got more expensive overnight.
Translate that for somebody who doesn't live in this. Duration means these stocks are priced as if the cash shows up years from now, so a higher long bond hits them first and hardest. That's why Nasdaq dropped 1.3 and the Dow dropped 0.2. Different clocks.
Yes. And the thing I cannot stop staring at. The Wall Street Journal had a piece yesterday arguing Big Tech's AI commitments are about $3 trillion higher than what sits on the balance sheets. Combine that with a 19-year high in the long bond, and of course the neoclouds get marked. That's not a demand story breaking. That's the financing story showing up.
I'll actually agree with the financing half. I won't agree that Tuesday was the AI trade cracking. Monday, those same names were the leadership. One session against a 2-week memory and optics run is a yield flush, not a
thesis change. I heard you. One session that broke 2 technical levels.
levels break. They also get recaptured.
Do they? This week?
That's tomorrow's argument, not yesterday's close.
Hold that. We're going to put a marker on it before we leave the tape. But first, Home Depot, because that's the print we actually owe you a clean recap on. The early numbers we were looking at 5 a.m. yesterday were a messy tape. The official release was a beat.
Adjusted earnings, $492 against a $473 call. Sales $47.9 billion, up 5.7%. Comps up 1.7 US. Comps 1.3. That's not a miss. That's a company that cleared the bar.
And they reaffirmed the full year guide. Sales up 2.5 to 4.5, comps flat to 2, adjusted earnings growth flat to 4%. CFO Richard McPhail's line was, quote, customers continued to engage in smaller projects.
Which is exactly the pullback language I was listening for. Smaller projects is, we're not ripping out kitchens. It's the same story as housing turnover near historic lows, just wearing
a beat, yes, or it's a retailer that figured out how to make money on the projects people will still do. They beat. They held the guide. The stock closed unchanged. That's not a consumer cracking. That's a consumer substituting.
What would actually change your mind on that, Marcus?
Lowe's cutting the guide this morning, or Target comps going negative. One Home Depot beat with a mix shift is a company. 2 of those 3 going the other way is a sector.
And I'll flip it. Target comps coming in at the 2.6 Wall Street's looking for doesn't retire my worry, because Home Depot just told you the mix is already shifting down the ticket. A clean Target number can still be a stretch shopper trading into cheaper baskets.
That's a very convenient way to never be wrong.
It's a very honest way to read a mix shift, you asked.
Devil's advocate, Ashley, because I'm not letting you have the mix shift all to yourself. If this was the consumer cracking, why did Lowe's rally 1.6% on Home Depot's print? And why did 299 S&P names finish green on a risk-off day?
Because the market still wants to believe the Friday retail sales miss was a one-off, and Home Depot handed them a permission slip. I'm not saying they're stupid, I'm saying they're early.
Or they're right, and you're the one who's early.
Why?
But you don't think so.
I don't think so.
Real quick, because it sits on top of this. The 50% Section 338 duties on a range of Canadian goods took effect at midnight. Home Depot's own guide this quarter explicitly includes tariff refunds partially offsetting fuel, energy, and other input costs. So the number they just reaffirmed already has a fudge factor in it.
Which is wild, right? They beat. They held the guide, and the guide has a line item for, the government might send us a check to cover the other thing the government just did. That's not a clean number. That's a number with a political hedge inside it.
It's also a company being honest about the cost stack instead of sandbagging you. I'd rather they name the offset than pretend the tariffs aren't there.
Pending home sales while we're in housing. National Association of Realtors said July contract signings dropped 2.3% month-over-month, 2.2% year-over-year. Lawrence Yun's quote was the highest mortgage rates of the year, hitting in the middle of summer. That's the demand side of the same Home Depot mix shift.
And that's the print that should have followed Home Depot lower, and didn't, because the earnings beat drowned it. I think that's a mistake. The tape makes a lot. It prices the quarter, not the forward housing number sitting right next to it.
Or it prices the quarter because the quarter is actual cash, and pending sales are a survey of contracts that may or may not close.
We're not going to settle that one this morning, and I'm not going to pretend we did. Here's the marker, and I'm leaving it unresolved on purpose. Ashley thinks Tuesday's break of 7,700 on oil and a 19-year high in the long bond is the start of a real unwind into a divided Fed. Marcus thinks it's a 2-day duration flush that Target, Lowe's, and a stale minutes print can reverse by Thursday. Watch 2 things. If the S&P reclaims 7,700 by Thursday's close and the 10-year stays under 475 after the minutes, Marcus has the better read. If the S&P is still under 7,700 Thursday night and the 10-year is back over 475, Ashley does. We will know both of those by tomorrow's show.
I'll hold there.
Same.
Oil, because it didn't go away overnight, it got louder. Reuters this morning. Brent up about 0.8 to 91.70 WT. I up 0.9 to 85.70. Fourth straight up day. Both contracts closed Tuesday at 3-week highs. Sarah's 92 didn't print. 90 didn't either. We're living in the messy middle.
And the messy middle is the part that actually keeps me up. I love this. Trump told reporters yesterday there are no talks with Iran, none scheduled, and the strait is open. Tehran says the strait is still shut. Reuters says trackable shipping through Hormuz slowed again this morning because ship owners don't know which version to believe. You cannot hedge a sentence that contradicts
Itself. You can, actually. You hedge the barrel, not the sentence. Brent at 91 is the hedge. The speech is noise.
The speech moved the barrel.
Did it? Or did 4 days of the same story move it?
Yahoo had him threatening to bomb Oman if it interferes with U.S. plans for the strait. That's not a color comment. That's a second country getting named.
And Iraq's cabinet, same day, approved new export routes around Hormuz starting September 1st. 2 Chinese shipping giants have already stopped sending tankers through and are picking up cargoes outside the Gulf. The workarounds are the story. The oil market is starting to price alongside the threat. That's why we're at 91 and not 100.
Give me a level, not a vibe. What would tell you the workarounds are winning?
Brent fading back through 90 on a day with no ceasefire headline. If the barrel drops without a diplomatic win, that's the market telling you the alternative routes are real.
And what would tell me they're not is Brent closing above 92 with the EIA print this morning, confirming another crude draw. Reuters says the API already showed crude and distillate inventories down, gasoline up, and the official numbers at 10:30. Street looking for about a 600,000 barrel crude draw. If that prints and Brent's still climbing, the workarounds aren't large enough yet.
Ashley, Stillman, his workaround case for a second. What's the version where Marcus is right and this stays a $90 problem, not a $100 one?
Fine. The version is, enough barrels are already moving through Iraq, Oman, and off. Gulf loadings that the physical market never actually goes short. The war risk premium stays in the price but doesn't compound, and the Fed minutes this afternoon care more about last month's CPI than this week's crude. I don't buy it, but that's the version.
I'll take the steel, man. Thank you.
Don't get used to it.
One more oil number because it's the one that made me sit up. Yahoo noted the Strategic Petroleum Reserve is at its lowest level since 1982. That's a Reagan-era number sitting underneath a Hormuz fight. If you needed a reason this doesn't fade as fast as a normal headline spike, that's it. There's less of a cushion to tap.
That's the number. That's the one. We have a war risk premium, a divided Fed, and a reserve that's already been drained. I cannot believe I get paid to look at that combination. It's terrifying. It's also the most interesting tape we've had in weeks.
You do hear yourself, right?
Every word.
Just checking.
Human beat, 30 seconds because it's our 50th episode this morning and we still have not had a green close this week.
Happy anniversary. The market brought a card. It's red.
I set 2 alarms for target and still beat both of them. The third one was just spite.
Spite is a legitimate 6 a.m. strategy. Back to it. Target, Lowe's, TJX, the actual consumer test we said Wednesday would be. Target's the one your calls are riding on.
Street's looking for earnings of about $231, $233 a share. Revenue around 26.1, 26.2 billion. Comps around 2.6%. That's a big step down from last quarter's 5.6, which was their first positive comp in 5 quarters under the new CEO, Michael Fidelke. Options are pricing about a 7% move either way. The stock's up over 50% year to date. That's not a quiet print. That's a don't you dare miss print.
And your call is comps under 1%.
It is, and I know that sounds aggressive against a 2.6 consensus. I'm not calling a disaster. I'm calling a deceleration that the 50% rally has not priced. If they print 2.6, Marcus is in great shape and I own a miss tomorrow. If they print under 1, the Russell and the whole consumer discretionary tape have a much worse afternoon than the minutes will.
My call was 1.3 or a guide raise, and I'll live on that. What I'd actually add is the quality of the number. Last quarter, they got a traffic beat. Traffic up 4.4%, and that's the thing that made the recovery look real. A comps beat on ticket, and not traffic is a different animal. I want to hear whether people are still walking in the door, not just whether the average basket held up.
What does that do to your November call if traffic is the miss and comps still clear 2%?
It makes me smaller, not opposite. A recovery that's ticket and not traffic is a recovery that's one promotion away from rolling over. I wouldn't fade the whole consumer on it. I also wouldn't add,
See, I would fade it. Because that's the Home Depot mix shift showing up at Target. Smaller projects at the hardware store, smaller baskets at the discounter. That's not 2 anecdotes, that's a household.
budget, or it's 2 companies. Wait for the third.
How many do you need?
3. I said 3.
Lowe's. Same hour, same sector, different customer.
Calls at 9 Eastern. Streets around 422 a share. Revenue around 26 billion. The read-through from Home Depot is the whole setup. Lowe's already rallied 1.6% yesterday on Home Depot's beat, so some of the good news is in the stock. If they cut the guide, that's the tell I named a minute ago. If they hold it, Home Depot stops being a one-name story.
And TJX is the one nobody outside retail desks is talking about, which is wild, because if the American consumer is trading down, TJX should be the beneficiary, not the victim. A soft TJX on a soft target is a much uglier tape than a soft target in a hot TJX.
That's the right pairing. Don't read Target alone.
Analog devices is the other print today that is not a consumer story at all, and I don't want it getting lost. Industrial chips, cars, factories, medical. A soft guide there is a broader economy red, not a stretch shopper red. Estee Lauder's in there too, which is the high-end version of the same question.
So Wednesday is luxury, value, off-price, home improvement, and industrial demand, all before 2 p.m. And then the Fed starts talking. That's not a session. That's a gauntlet.
Klarna, quickly, because it was the other consumer tell yesterday and it was ugly. Buy now, pay later, beat the quarter, cut the year. Revenue guide down to about 408 to 416 billion from above 434. GMV cut 2, stock dropped roughly 20%. They pointed at FX in Germany.
Germany. Sure. A 20% drawdown after a beat is not an FX story. That's the market, looking at a credit product that's used by stretch shoppers and deciding the volume isn't there. I would not ignore that sitting next to Target this morning.
I wouldn't make it the whole case either. One European BNPL name is not Target. It's a data point. File it.
Filed. Loudly.
Softly filed. From my side.
Futures this morning, before we get to the minutes. This is the setup into a day that could go either way.
Basically asleep. S&P futures flat to up a few handles. Nasdaq mixed. Dow unchanged. Reuters has oil still bid. Brent 91.70. 10-year this morning around 469, 470, easing a couple of basis points from yesterday. Gold slipped about 1% yesterday to around 44.24, so Ashley's Friday. Gold call is still very much in play and still the wrong side of 43.50.
Your Sunday call, for people who missed it, hawkish minutes, gold under 43.50 by Friday. Stale minutes, it holds.
Still exactly where I am. Yesterday's dip to 44.24 is a start, not a destination.
And Bitcoin was the one that actually caught a bid Monday night, then got ignored in a Nasdaq dump. That split is still sitting there. Gold sold off with yields, crypto didn't hedge anything. Same story as last week, just a new session stamped on it.
Minutes, 2 p.m., July 28th and 29th. 9 to 3 to hold at 350 to 375. The three were Beth Hammack, Neil Kashkari, and Lori Logan, all regional presidents, all wanting a hike. First unified hawkish block like that since 2016. Ashley, you've been waiting on this all week. What are you actually reading for, not hoping for?
Whether those three were a footnote or a fight. If the minutes read like the room almost moved, that's a yield spike walking straight into Jackson Hole with oil at 91. If they read like three names in a paragraph, Marcus gets his stale transcript take and the 10-year probably eases. I think it's a fight. Don't you feel that from the way Warsh has been talking?
I feel a new chair who doesn't want to get boxed in by three regional presidents. Different feeling. 3 weeks is a long time. We've had a cooler CPI, a cooler PPI, a soft jobs print, and a retail sales miss since they voted. The minutes are a transcript of a room that hasn't seen this week's data. I think they read as history. I think treating them as a live hike signal is how you get caught leaning the wrong way into Jackson Hole.
What would change your mind, Marcus? Give me the sentence in the minutes that flips you.
If they describe inflation risks as having increased materially since June, or if they name energy prices as a reason several participants wanted to move now, not later, that's live. A few participants preferred a hike is a footnote. I've already seen the footnote. I need the adjectives.
And I'd take the other side of the same sentence. If they downplay energy, after oil's done what it's done in 3 weeks, that's the minutes being stale on purpose, and that's its own tell. A Fed that won't name the barrel at 90 is a Fed that's going to get dragged there in September.
Jackson Hole is still next week, 27th through 29th. Warsh's first keynote as chair. He's already said he may not give a rate signal. Does this afternoon change that speech, or is this afternoon just the appetizer?
It changes the audience, not the speech. If the minutes are hawkish, Warsh can afford to be boring at Jackson Hole because the market will have already done the work. If they're stale, he has to decide whether he wants to surprise people 8 days later. That's a worse seat.
I'd rather him be boring either way. A new chair picking a fight with his own minutes 8 days after they drop is how you get a 20-handle range in the S&P for no good reason.
Cut there. We've got calls to get to, and the open's coming. One thing I'm not letting slide. You two are not going to agree on 7,700 this morning, and you're not going to agree on these minutes, and that's fine. The tiebreak I gave you still stands. Reclaim the level and keep the 10-year under 475, Marcus. Fail both, Ashley. Don't come in tomorrow and tell me it was mixed.
Wouldn't dream of it.
Mixed is a cop-out. Agreed.
Calls. These are Thursday's board, so make them specific. Ashley, you're up, and it can't be target. That's already writing.
Minutes and the 10-year. If the write-up treats those 3 hike votes as a real fight, not a footnote, a fight, I think the 10-year closes Thursday back above 475. That's the level it tagged yesterday and couldn't hold. If it gets there and stays there, the S&P doesn't reclaim 7,700. That's one call, 2 consequences.
Marcus.
I'll take the index. If target comps print at or above 2%, I think the S&P reclaims 7,700 by Thursday's close, minutes or no minutes. A clean consumer number does more to the multiple than a 3-week-old transcript.
Wait, back up. You're fading the minutes entirely?
I'm ranking them.
Ranking them below target.
Consumer cash today beats Fed adjectives from July. That's the ranking.
And if target's at 2% and the minutes are a fight?
Then Thursday's close tells us which one the market actually cares about. That's the point of putting a number on it.
So we've got Ashley on 475, Marcus on 7,700, and both of yesterday's target calls still sitting underneath. That's a lot of Wednesday doing Thursday's work, which has been the pattern all week.
Most Wednesdays lately.
Here's today in one breath. The S&P closed 76.92 through the floor, Nasdaq down 1.3 with chips and the neoclouds taking the punch, and Home Depot beat, held the guide, and still couldn't hold a 2% pop into the close. Brent's at 91.70 this morning, 4th day up. Trump says no talks. Tehran says the strait's shut, and the workarounds are the only thing keeping this from 95. Target, Lowe's, and TJX hit before the bell. That's the consumer, and 2 of our calls are riding on Target's comps. Minutes at 2, EIA at 10:30, Canada tariffs already in effect. Watch 7,700, watch 475, and watch whether Target's traffic is real. If the show helps, follow Nova Ventures Daily wherever you get your podcasts and find our written notes at novaventures.us. That's your Wednesday morning brief. Have a great day, and we'll see you tomorrow.